Hello, everybody. Welcome to the latest Mouthy Money podcast. I am delighted to be joined by Will Rind of Habito. Hi, Will.
Hi, thanks for having me, Chris.
It's an absolute pleasure. Some eagle-eyed people among you will have noticed that Ed is not with us on this one, I'm afraid. He will be back soon, bigger, brighter, and better, I'm sure. But today you've just got myself and Will talking about the UK mortgage market. There has been loads happening. And who better to get on than Will from the digital mortgage broker and mortgage platform Habito? Well, would you mind telling myself and the listeners a bit about who you are and who Habito are before we dive into it?
Yeah, certainly can. So, like you said, my name's Will Rind. I'm VP of Advice and Growth at Habito. So, I'll just start with a bit of background of who Habito are. You touched on it. We're an online digital brokerage, and the only brokerage, as far as I'm aware, that from cradle to grave, it's fully digital. So, you'd start on our website. Of course, we need certain information in order to check your eligibility. Um, but it's very, very intuitive, and we utilize tech to make the process as simple and as quick as possible. Our mission is to make home ownership easier, and you communicate with our brokers over live chat, also over phone if that's your preference. But all the documents required, all uploaded fully digitally. And like I said, we create very intuitive systems to guide you through the process, ultimately get you into the property as soon as possible.
So I think that's why we've got you on. What you said there about the mission is to make home ownership dreams come true. It's a really topical subject at the moment. We've had the Chancellor Rachel Reeves stand up around Mansion House speech and talk about some reforms that she's making to the mortgage market, which we'll come on to in a minute. But the ideas around those are to try and help first-time buyers to get on to the property ladder, and the reason for that, I think, is it's increasingly becoming more difficult for people to buy a home in the UK. And I just want to run through some stats that I've done in preparation for this, Will, talking about what's affectionately become known as BOMAD, or the Bank of Mum and Dad, who tends to bankroll a lot of financial transactions or transactions when it comes to home ownership, help people to buy houses and put down deposits and all that kind of good thing. Over half of UK's first-time buyers in 2024 say they received financial help from family. So that was a total of 38.5 billion since 2021. And then last year, so that's 52% of those people. And then the average recipient of financial help was given £55,572, according to the estate agency Savills, in an analysis they published recently. And the size of those contributions are increasing because house prices have broadly over that period of time gone up. So mortgages are more expensive as well because of higher interest rates. And so apparently the age in which parent assisted buyers got on the property ladder was 30.2 years. Point two is a bit of a weird way of putting it, Will, but bear with me on that. And then those without that level of assistance took a full 2 years longer to get on the property ladder, having to save those larger deposits. And as you would expect, London and the Southeast is where property is priciest and where the stark disparities exist in terms of the hardest to get on the property ladder. So if you're in London and you did it without assistance, the average age is basically 34. And then if you did it with assistance, it was 31.7 years. So that paints a bit of a difficult picture, and then it's somewhat compounded by a report that I read in Time Out today in the London side of things from Demographia International Housing Affordability, who I'd never come across until today, but they have said that basically, and this is a quote, London is impossibly unaffordable with a multiple medium of 9 times your income needed in order to buy a home. And I'm laughing there, but of course that isn't funny for many people who are trying to sort of buy in the capital or elsewhere. And although the picture's better in the rest of the UK, it's still incredibly difficult. So with all of that said, you guys help people get on the property ladder. How much do you see Bank of Mum and Dad influencing property transactions? Is it the only way that people can feasibly find themselves getting a foot on the property ladder, or are there other options out there for people who want to achieve the dream of home ownership?
So we see it a lot, but we don't see it for every customer. There are other ways, as you alluded to, and I'll come back to a few other examples in a moment, but I'll just touch on some of the other opportunities that you've got. Certainly recently, and I'll start with 100% mortgages, and those that experienced 2008 and slightly before that might be a little bit nervous about 100% mortgages and the estate of the economy thereafter. However, as you alluded to, saving for a deposit is incredibly difficult, certainly with high rents as well. Rates are higher, they are lower than what they've been historically, but that's therefore putting a bit of a stretch on affordability, and also the monthly costs are higher. But there are two lenders that have recently come into the market, Gable and April Mortgages. They are offering 100% mortgages again. So you could buy a property subject to meeting criteria and affordability with no deposit whatsoever.
So just to pause on that, Will, sorry for the listeners who may not be 100% mortgage is essentially that, right? So they'll lend you all the value of the property at the time rather than you having to save a deposit.
Exactly.
Uh,
Exactly. Now, there's a few watch outs to be aware of. If the product you're going for has a fee, lenders aren't particularly happy with lending over 100%, and understandably so. So, if there is a fee, you would have to pay that up front. So, it's not as if you don't need any capital up front, and you still need, money for things like solicitors and stamp duty if applicable, of course, but that would apply if you're buying a property with a deposit. There's another lender that very recently launched that are offering a mortgage with a 2.5% deposit. So you still need some deposit, but they can lend up to 6.5 times income as well. And now, just to touch on that 6.5 times income, we have seen quite a few lenders relaxing their risk appetite, is probably the best way of describing it, that they are essentially increasing what you can borrow from them. And that's done by a number of different factors, but largely reducing what they call the stress rate. And that is when you look to apply for a mortgage, they will stress the calculation on a certain interest rate, which is higher typically than what you're paying, but they need to ensure the mortgage remains affordable throughout the lifetime of the mortgage. So there is good news there in terms of don't really need a deposit or a small deposit, and also lenders are lending more as well.
So there is light at the end of the tunnel then.
Yep.
People are able to get a mortgage without that help from the bank of mum and dad. I think it's quite interesting. There is a problem here though, and we'd be remiss to kind of ignore it, that housing is becoming kind of more unaffordable. And
Yep.
recently the Chancellor did stand up and talk about how they're going to sort of reform mortgages and help the industry to deliver for more people, first time buyers who are trying to get on the ladder. There was a few things that came out of that. I'd be interested to kind of get your view on them. The first one being they're going to permanently extend high LTV mortgage insurance scheme to help first time buyers. And then the other thing, which I'm surprised hasn't already been implemented really, because it's been talked about for quite a while, is taking into account people's rental payment histories as that part of contributing towards a good credit score. So if you've been consistently repaying your rent and shown that you're committed to that and never missed a payment, all that kind of good stuff, then surely that kind of bodes well when it comes to kind of making mortgage repayments. So yeah, those two kind of stood out. I don't. Obviously, Reeves wants to try and make things a little easier for people. How helpful do you think those are, and particularly on the kind of rental payment thing? Is that something that you would welcome, or you think would be useful for your customers?
Absolutely, yeah, I'd welcome it. And Chris, I will go back to Bank of Mum and Dad. I said I would, and didn't go back to it. So remind me to come back to that. But
Okay.
yeah, I think it certainly will help using rent as essentially a track record of, you've been able to maintain payments at X amount, and it's a frustration. I've been paying, I'm making this up, £1,600 on rent, but I can't get a mortgage that's £1,200. How does that work? However, there is a lender currently, Skipton Building Society, that have a product called Track Record actually, and it does essentially a similar sort of thing. You do still need affordability with them, but they will also assess your track record of paying rent, and that can then contribute to, can I borrow the amount I'm looking for? So I wouldn't say it's too innovative because it's already been done. However, hopefully we'll see more and more lenders kind of being a bit more relaxed about viewing rental as that sort of track record for affordability. So yes, I think that's absolutely a positive. Now, the mortgage guarantee scheme, it's a similar sort of thing. There are many lenders that are offering products with a 5% deposit, so 95% loan to value. And as I've touched on, there are a couple of lenders at 100% and one at 97.5. And Accord, another lender, have well, it's a few months back now, but they launched a product where you could have as little as 1% or a minimum of 5 grand deposit. So I think that's more for the lenders really, to give them a bit more confidence to lend at the higher loan to values. And of course, if you've got more lenders, that creates more competition, and therefore that should in turn bring rates down. So I encourage it for sure, but I wouldn't say it's something brand new.
Okay, and you said you wanted to come back to Bank of Mum and Dad?
Yes, thank you. Yeah, so I said I'll touch on it. So, just another way, of course, Bank of Mum and Dad. What often happens is that the parents will remortgage their property, take some money out, that can then be used as the deposit. It's essentially given as a gift to the purchaser, and it varies from lender to lender. But generally speaking, the lender just needs to know who the gift has come from, whether it's repayable. By the way, it shouldn't be repayable; it should be a gift, and they've also got no interest in the property as well. So the rules are fairly sort of relaxed with that. But there is also another scheme you can get. It's called joint borrower sole proprietor. So essentially, you've got two people that are assessed in terms of how much you can borrow. Doesn't necessarily help you out with the deposit side of things, but it certainly can increase what you can borrow. So you're essentially using two incomes to work out how much you can borrow, but you're the only person that is actually living in the property and owns the property as well. So that's really positive. You haven't got parents on the mortgage, and if they ever wanted credit elsewhere, they don't have that mortgage impacting their sort of credit worthiness.
It sounds like the industry is kind of thinking quite innovatively about ways round this affordability problem. I mean,
Yes.
ultimately they can't control house prices, right? That's a wider thing. But
Yeah.
are you seeing more and more of these types of products come into the fore, and people thinking about how to solve this issue?
Yes, absolutely. All of those products that I've mentioned have been within the last 12 to 18 months or so, with the 100%, in the last couple of months or so. So, yes, I credit to the lenders really. They're really working hard to try and be innovative and try and think of ways around um, the kind of the high property prices and the rates, etc. But like you touched on it, the real challenge is the property prices themselves, and how much people are borrowing against their disposable income and net income. And I've seen some stats recently where that's creeping up. Historically from about 30%, now pushing over 50%. So a large chunk of your net income is going towards mortgage payments.
It's really it's a really important area as well of the economy, I think, sort of the housing market. And if that's
Yeah.
kind of healthy and moving, then it contributes to all sorts of other things. So I can see why it's a focus for the chancellor to try and get that sort of ability, that as well as from a political standpoint, having that pathway to home ownership is going to make people feel less frustrated, shall we say, with their living situation. But also, it does generate pounds in the economy, right? When people are moving house and paying solicitors and home improvements and all that kind of good stuff, we do need that movement in there for
Yeah,
the UK
and
to have
something
that.
I'll add to that, I think it's credit to the regulators as well, which don't always hear me say those
Yeah.
words. Um, but they've been given a growth target essentially, and historically the FCA are there for consumer risk and to protect customers as well. But if they've got a growth sort of element to how they assess that, of course they need to make sure they protect consumers. But if they are looking to drive growth in the area, that therefore can lead to more lenders being able to do more things, but also companies like Habito or any other fintech firms, just having that support from the regulator and from the government as well, just to streamline that process of buying or remortgaging a property. So I think that's positive as well. You can only do it if the regulator will allow you to do it.
Yeah, and I think the culture of home ownership in this country, combined with all those efforts you're talking about, I'd be interested to know how that's impacted sort of inquiries to you guys. Are you still seeing? Do people still get in touch with at the same level as they did maybe 2, 3 years ago? Have you seen an increase, a drop off? What's the market doing at your end in terms of
So
interest?
all of the above, to be honest.
Right,
To give you some background, I started in mortgages in 2008 as
good
a broker.
time.
Yeah, exactly. You
So
could
for
argue
those
for
for
the worst
those
time.
listening, that was the global financial crisis when there was a huge credit crunch and everyone stopped lending money. The banks stopped lending money to each other. So how was that, Will?
It taught me a lot about persistency,
Okay.
never giving up. But The reason why I mention that is because there's never been a simple time in the mortgage market. There's been some good times, of course. There's been some bad times. There's been some terrible times. Certainly more recently with COVID, a mini budget, etc. And certainly over the last couple of years or so, it does feel like it's stabilised a little bit, and that's largely to do with swap rates. And swap rates, if people aren't familiar, they're kind of largely responsible, not solely, for what is going to happen with interest rates in the future. So if they've stabilised a little bit, then you don't see those fluctuations in rates. So as a result of that, we've seen demand kind of reasonably stable recently. It is shifting slightly more towards remortgage activity, and that's partly for some of the reasons that we've been discussing. The first time buyer is essentially the catalyst which gets the chain moving. And if you don't have as many first time buyers, then that obviously has a knock on effect as well. So it has been relatively stable, but with all the things that are going on in the world, in the Middle East, etc., and various other things that could be happening. I won't mention our good friend over the pond, but you don't really know what's around the corner. And consumer confidence, the reason why I say that it comes into it, plays a huge part in the mortgage industry. If people are confident and they know what's happening with the market, they're more likely to take action and take that jump onto the property ladder. And from what I've seen, that confidence is kind of growing. However, with the inflation figures that were released today, a slight uptick there, will that have an impact on when the Bank of England will reduce rates? We don't really know, but that is what has kind of impacted the market at the moment, because there's been a lot of talk, and the Bank of England have been very open about interest rates potentially coming down without saying when. So you've got a lot of people that are kind of waiting for that to happen. So, for me, obviously I'm very biased towards this, but if you speak to a broker, they can give you an idea of what it's going to cost you, how much it's going to cost you, and give you that confidence you can make an informed choice of whether you do something now or in the future.
Yeah, I think that make a plan thing is something we definitely think about. I've been making, and the Bank of England quandary is a big one. I think it came up on a pod we did not too long ago, which is, I think about nearly a year ago, people were saying, well, rates are going to start coming down, and they've come down a little bit, but not as much as people had predicted. And while that optimism was reassuring at the time, the reality is that inflation has remained somewhat stubborn, and there's still pressure on the Bank of England in particular to keep the base rate where it is, I suppose. I will be really watching closely at the next base rate decision, because that really will sort of maybe set an indication about how seriously they're worried about these inflation figures and whether or not. No, I'm remortgaging in October next year, so it's time
Okay,
for
I'm
me to
just
kind
making a note in my diary about that, Chris.
I'll expect a call from you guys, Will. Um, so if you're going back to first time buyers for a minute, we touched on the sort of the remortgage thing, but going back to first time buyers, if you're thinking of you've got a bit of a deposit saved and you've got a property in mind, what's the first thing that you guys could do to help someone, or that you would suggest that people should do when it comes is it just speak to a broker and see what your affordability is like, and what products might be out there?
Exactly. Yeah. If you were to speak to Habito, let's say one of our brokers, the first thing they're going to do is assess how much you can borrow, and we can give a range, because you can't borrow the same amount from every lender. It's not quite how it works. So we can give an indication of the maximum you can borrow, the kind of the range that most lenders will be able to offer you a mortgage, giving you a bit more choice, and also what that's going to cost you on a monthly basis. Now, often people, when they look for a mortgage, they'll give a term of 25 years or 30 years, but some lenders can go up to 40 years. Now, having a debt for 40 years is quite a scary thing, but you've got to bear in mind that you'll start at a high rate, and then subject to what happens in the market when you remortgage and you've got more equity, that can then bring that down, and in turn you can reduce your term as well. I digress a little bit there, but it's important firstly just to know where you currently stand. We can then say, if you were to increase your deposit, let's say, by 5%, then you've got X amount of lenders and you can borrow this much money, and this is what the monthly costs are going to be. And we can't guarantee that that is going to be the case as and when you're ready to buy, but at least you are kind of armed with the knowledge and information required, rather than going in blind. And mortgage experts, mortgage brokers, they're your friend. They're there to help. They're not just a kind of a one stop, here's some advice and go. They'll be there to answer any questions you've got. If you see a property, what are the chances of me being able to get it? So it's good to kind of make that connection early doors.
Mm. So the home own buying process, So if these first time buyers, hopefully you followed that information, you know what you can borrow, you had an offer accepted. Famously, it's quite a complex and kind of long-winded process with some, I suppose it'd be fair to say, archaic practices within them. When I remember when I was sort of buying my first flat with my now wife, one of the hold-ups was a discussion around chancel insurance when we did the surveying, which was that there was a church somewhere that if they needed their steeple fixing, that I would be on the hook to pay for it, which I didn't even know it was there. So
Yeah.
we had to get some chancel insurance, which held it up for a week or so. So they would pay for it if it ever happened in a kind of one-off payment. So there's all these kind of weird and wonderful things of what is quite an antiquated, old property landscape within the UK.
Yep.
You guys are digital, right?
Yep.
How do you make that process easier for people who are looking to kind of rattle through? Because speed is important too. Chains can fall down and offers can be changed and and it's a very kind of nerve-wracking and stressful time. So what is it that you guys do to try and help that process be smoother and more efficient for people?
Well, I'll start firstly on kind of what we stand for, and then I'll go into the process. That mortgages can be a little bit intimidating. Lots of jargon, lots of acronyms. You don't really know where to start, and there's a kind of a wealth of information out there. So we set out to make things simple, completely jargon free, easy to understand, and we've got loads and loads of content on our website. Number one, to educate customers, but also we've got lots of tools that you can self-service. So I touched on speaking to a broker, and I'd still recommend that, but getting an idea of how much you can borrow on our website. We've got a mortgage calculator, and you can actually get a mortgage in principle, or a MIP, or a DIP, as sometimes people call it. You can get an idea of what rates are available at different deposit amounts and different terms, etc. So that's one thing that really, really helps. The second thing is that the fact find, which I touched on earlier, incredibly intuitive, and we designed it in a way that it kind of educates a customer as they go through. So, for example, because we've spoken a lot about deposit, when you put your deposit in, it'll tell you exactly what your loan to value is, what that means, what the impact could be by increasing your deposit, for example. And we do that throughout the whole fact find. Now, when you're speaking to a broker, I mentioned at the start that we are a tech-focused business, and so if we want to get affordability from 90 lenders or so, we can do that at a click of a button. So we can confirm that within seconds. Also, the way we've designed our system, we've built sourcing, which for those that don't know, sourcing is where a mortgage broker would find mortgage deals for you. That is an inbuilt system. So all the data you provided on your personal situation is inbuilt, so we can quickly find deals that you're eligible for, that you can borrow the amount you're looking for as well. Now, when it gets to the point where you're submitting an application, we have just the one point of contact, and we have a dedicated, we call them customer success expert. In old money, that's a case manager that takes the case from submission right to completion. So you've got that one point of contact that is keeping you updated with what's going on on the mortgage. And the final thing I'll touch on, because you spoke about a bit about the conveyancing process, and I don't have the answers, but a lot needs to be done there. But we have, and it's been very successful. We launched Habito Plus, and Habito Plus are Habito employed conveyancers. And we also help arrange a survey as well, whether a level 2 or a level 3. And the benefit of that, of course, is you've got that one point of contact as well. One that's helping with the mortgage, but also helping on the conveyancing side as well. So it's just joining the dots a little bit, put in simple terms, rather than you speaking to 15 people and trying to coordinate it yourself.
Mm. So conveyancing is just, again, I know we're going with Janet and John, but I think it's important. Conveyancing will be all the kind of legals around boundaries and who's responsible for what when it comes to maintenance of things and all that kind of good stuff, right? So that can be quite a slow process. And as I touched on with my chancellor insurance thing, um, you're dealing with two sets of lawyers and all that kind of good stuff. So the buyers and the sellers, and everyone wants to make sure that everybody is kind of responsible and ready for their own thing. So how long does that process typically take, Will? I know it's a
In
how long's a piece of string
Yeah.
question, but in your experience, what are we looking at?
I would say between sort of 8 to 12 weeks, but as you said, how long's a piece of string? And there's a few factors to consider. So if you are buying as part of a very big chain, and just to elaborate on that, first time buyer buying a property, they're buying on, they're buying on, they're buying on, and so forth until you get to the end of the chain. The larger the chain, you could be completely ready, but you're reliant on other people and their conveyancing and their mortgage offer coming out. So through no fault of your own, that could delay things as well. The other thing is freehold and leasehold.
Mm.
Leasehold, I don't know whether you mentioned a flat. I think you
Yeah,
bought.
it was a leasehold actually. Yeah, so I think I'd be interested to hear what you say and see what I did wrong.
I'm sure you did nothing wrong, but there
Okay.
is also a management company when it comes to
Mm.
leasehold properties the majority of the time. So you're involving another person into the mix as well. And you need to, the conveyancers need to look at the lease in a lot of detail as well. And the purchaser needs to be aware of things like service charge, ground rent, and any sort of stipulations within the lease which says that, the amounts will go up in X number of years by X%. So that can just elongate the process a little bit as well.
It takes time, but it's worth it in the end to make sure that you're fully aware of everything you're signing up to at the outset, right? So
Yeah, without a
it's
doubt.
frustrating at the time, but once it's all done and sealed and signed, then there's that reassurance there. You guys are digital first, right? So people can speak to a human if they want to, though, right? They can pick up the phone and speak to,
Yeah.
yeah, because
Yeah.
that hybrid thing. Sorry.
Yeah, we're digital, but there's a misconception with Habito that we're robots.
Uh,
I'm not, and all of our brokers are behind the scenes doing all the heavy lifting. They're all fully qualified, of course. They're the people that give advice. They can communicate over live chat. A lot of people prefer that because they could do it in and out of meetings at work, or I don't know, whilst they're getting on with their life, feeding their children, or whatever it may be. Um, Side point, we had one review from a customer, 5 star, but he said, I did my mortgage in my pants. Probably a bit too much information, but it just gives you that idea of how some
shows
customers.
how relaxed they were. That's one
Yeah,
thing. There you go. Yeah.
exactly. But of course, we can pick up the phone when a customer requests, or if it's a particularly complex case, then yeah, certainly we'll pick up the phone.
Mm. But on that, you mentioned you're not a robot, but a lot of people are using robots these days to kind of begin their search or ask questions. And I'm referring here to obviously ChatGPT and Copilot and Gemini and all those kind of good things. How how do you guys feel about the whole kind of AI encroaching into the world of financial guidance and conversations? Are you finding that's a positive thing? Is it a negative thing? How many people are coming forward with questions that are prompted by ChatGPT? What's the situation there?
So overall, I think it's a really, really positive shift. However, I think we need to proceed with caution. AI is the buzzword. Everyone's coming out with these new products and propositions when I'm not really sure they actually are AI, if I'm perfectly honest with you. And why I say you need to proceed with caution is because I don't really feel that people are completely ready for a robot to give advice. There's also a question of, okay, who's liable for that advice? There's no human? Is someone checking over that advice that's provided? But where I see lots of value with AI is, for example, um, it's an internal thing, but with compliance, we need to make sure the advice we're providing is spot on, and that can take between 2 and 4 hours to do a case check. So I know this is not overly exciting, but it's a useful use case for AI. You can utilize AI, and you can do that within 3 or 4 minutes or so. So that would make a company far more efficient. And there's various other areas like financial promotions. They need to go through certain regulatory guidelines. That was historically a human doing that, but AI can do that very, very quickly. Um, but I also feel that if you get this right, there is a whole abundance of criteria out there, from lender websites to various different criteria platforms like Knowledge Bank. You've then got separate systems to run affordability. A broker needs to assess suitability, and they need to check plausibility as well. AI, if used correctly, could really help with that. These results say it's affordable. These are the rates that are available. These are the preference. And when I talk about plausibility, I'm referring to, I don't know, perhaps a bouncer or a builder working to age 95. It's probably not realistic that that's going to happen. I think it can be utilised in the right way for sure.
So it was speed. We're talking here about speed then and efficiency, and we'll see that in hopefully, you know, chancellor insurance allowing. We'll see faster turnaround times when it comes to mortgage in principle to actually getting the funds in to buy the house or to remortgage. Is that what you're saying?
Exactly that. And I think that extends to the conveyancing process as well. I touched on leases. They can be very, very lengthy, those documents. And it's a lot of historic old terminology and jargon. AI can be used to sort of summarize those documents and pull out the important points to the conveyancer as well.
I think from a personal point of view, I've used AI for different kind of financial questions as a prompt, as a starting point. But I think what I like about sort of the broker journey is that you can sense check that with somebody who has a wealth of experience and a responsibility, as you mentioned, from a kind of regulatory and compliance point of view, to do the right thing by you. So it's nice to make you slightly more informed, but actually, you know, maybe it's my age, but it'll be interesting if any listeners feel differently and they're like, well, no, I'd completely be happy to rely on it. But it's a good starting point. But I want the end point to be with somebody like yourself, Will. I'll be doing it fully clothed, but I do want to have a conversation with somebody who can reassure me that the remortgage I do in October is the right thing for me, and we've checked everywhere.
Yeah, absolutely. I do think as well the benefit is that you've got 24/7 availability. Never will get tired as well. But just to touch on that, I'm not a big fan when you go onto a website and it's just AI bots everywhere. The one that we have designed does give 24/7 availability, but you've always got the option to say talk to a human, and it'll put you straight through to a human.
Great. Well, Will, that's been a whistle-stop tour of the mortgage process. It's been great to hear about Habito. Thank you so much for joining me and for giving me your views on the affordability and the Chancellor's Mansion House stuff and many other things. Hopefully, we'll have you on again to speak in the future. Thank you.
Yeah, I'd love to. Thanks so much, Chris.
And thanks everyone for listening. As I mentioned, Ed will be back soon. Do subscribe to the Mouthy Money newsletter on the website. Do give us a follow if you're not already. Do like the video. Do drop a comment and then let us know your views on some of the things we discussed today. We're always pleased to hear what you've got to say. And if you've got any questions, we're more than happy to put them to Will or others as well if you have them. So feel free to ask. But it just remains for me to say thanks once again and goodbye.
Thank you for tuning into the Mouthy Money podcast. Don't forget to hit like and subscribe on all our content. Follow us for more on your preferred podcasting channel, including Spotify, YouTube, or Apple Podcasts. Stay in touch by following our social channels on Instagram, TikTok, and LinkedIn. And don't forget to subscribe to the Mouthy Money newsletter on mouthymoney.co.uk. The Mouthy Money podcast is produced for general informational purposes only. It should not be construed as investment, legal, tax, or other forms of financial advice. If in any doubt about the themes expressed, consider consulting with a regulated financial professional for your own personal situation. Past performance is no guarantee of future results. Investments can go down as well as up, and you may get back less than you started with. Never invest more than you can afford to lose. For more information, visit fca.org.uk/investsmart for more. Thank you.